Buongiorno e benvenuti. Sono Gianluca Lacalce, sono l'amministratore delegato di Fideuram Investimenti, la società di gestione del risparmio di Banca Fideuram. Come penso sappiate, la nostra missione è quella di gestire gli attivi finanziari della clientela di Banca Fideuram e nel svolgere il nostro lavoro è quello di analizzare giorno dopo giorno l'evoluzione del quadro macroeconomico, di approfondire gli aspetti valutativi un po' di tutti i mercati e sostanzialmente di interrogarci su quali possono essere i driver, i fattori che possono spiegare l'evoluzione dei mercati in futuro. I nostri clienti tipicamente ci chiedono una soluzione di investimento per il medio e lungo termine, ma ci chiedono anche di saper riconoscere quelle che sono le opportunità e quelli che sono i rischi che si presentano nel breve termine. Naturalmente ci chiedono di massimizzare possibilmente le opportunità e di gestire e minimizzare possibilmente i rischi. In occasione di questo Salone, edizione 2014, stimolati anche dal tema scelto, quello dell'investimento nel lungo termine, abbiamo deciso di puntare un po' oltre quelle che sono le analisi che facciamo giorno dopo giorno e quindi di guardare dei temi un pochettino più ampi. In particolare abbiamo individuato due temi che riteniamo cruciali per chi fa il mestiere del gestore. Il primo tema è quello di come la storia possa aiutarci a capire qualcosa di più del presente e come ci possa aiutare sostanzialmente a affrontare meglio l'evoluzione dei mercati futuri. L'idea sottostante è quella di comprendere se esistano delle infrastrutture di comportamento, di evoluzione della realtà che tendano a ripetersi nel tempo. Il secondo tema, che penso sia uno dei temi più importanti e più cruciali per l'investitore, è quello della diversificazione. Ci hanno insegnato che diversificare è bene, ma quello che vediamo ogni giorno è che ciò che è alla base della diversificazione, la correlazione fra le attività finanziarie, è instabile, cambia segno, cambia dimensione. Quindi le domande a cui cercare di dare una risposta sono se alla fine abbia senso diversificare, come cambi nel tempo l'approccio, o come debba cambiare nel tempo l'approccio alla diversificazione, e se ci sia un'evoluzione negli strumenti per diversificare. Quindi questo è un tema veramente focale. Per stimolare la riflessione abbiamo pensato di coinvolgere due rappresentanti di due fra le più grandi società di gestione al mondo, sicuramente fra le più sofisticate, sono due hedge fund, e sono Winton Capital e AHL del gruppo Man Investment. Winton è una delle più grandi società di gestione quantitative, è un hedge fund sostanzialmente, e prende delle scelte di investimento basate sulle analisi fatte da un team di oltre 100 analisti quantitativi. È molto nota, direi addirittura famosa all'interno, come dire, dell'industria, perché ha un capo, che in realtà è la persona che l'ha creata, che è David Harling, che è famoso per una sua capacità estremamente visionaria, estremamente lucida sull'evoluzione del business. AHL è storicamente una delle più grandi e più conosciute società di gestione quantitative, ha oltre 25 anni di track record, quindi è un track record per un hedge fund veramente eccellente, che fa sì che gli sia riconosciuto di fatto di essere la prima società a aver introdotto l'approccio di investimento sistematico. Anche AHL ha un team di ricerca noto per la sua eccellenza ed è soprattutto nota perché investe moltissimo nelle capacità di analisi dei mercati e, visto che parliamo di diversificazione, di analisi delle relazioni tra mercati. Ma vengo subito a introdurre i due relatori che oggi ci accompagneranno in questa riflessione e introduco James Holmes di Winton Capital, che è responsabile della ricerca storica di Winton. Quindi il suo è un mestiere diverso da quello che usualmente troviamo in questo settore, è uno storico, ed è uno storico, come dire, appassionato dell'analisi delle crisi finanziarie e delle bolle finanziarie. Ha scritto un bellissimo libro The Pit and the Pendulum, insieme al fondatore dell'azienda, in cui racconta l'evoluzione delle storie delle bolle finanziarie e delle crisi finanziarie. Sandy Rattray, invece, è l'amministratore delegato di ECL, il gruppo Manna, e in ECL dal 2007, in ECL e in Man è anche responsabile di tutte le strategie quantitative, ed è stato fino al 2007 in Goldman Sachs responsabile di tutta la parte di business, di strategia qualitativa e di equity derivatives a livello globale, ma penso che l'elemento che più ci aiuta a inquadrarlo nella sua professionalità è il fatto che sia stato uno degli inventori dell'indice VIX, che credo un po' tutti conosciate. Quando si parla di volatilità tendenzialmente si parla di VIX, peraltro parlando con lui prima mi ha detto che oggi è il 10° anniversario di quando hanno, come dire, costruito questo indice, quindi anche un giorno da questo punto di vista particolare. Detto questo, comincerei subito da James, sostanzialmente introducendo quello che è l'argomento di cui lui ci parlerà. Il tema, come vi dicevo, è quello della storia come strumento per capire il presente e per tentare di capire come possa evolvere la situazione. In particolare in questi anni abbiamo visto che c'è stata un'esplosione del debito, ed è su questo che gli abbiamo chiesto di parlare. È un'esplosione eccezionale per la dimensione, eccezionale per la velocità con cui si è avuto un incremento nella massa di debito pubblico e eccezionale per l'ampiezza. Sostanzialmente oggi, con pochissime eccezioni, quasi tutti i paesi sviluppati hanno una situazione di debito pubblico enorme. Quindi la domanda che le abbiamo posto, il tema che le abbiamo proposto, è se nella storia ci siano stati dei casi che permettano di fare una riflessione su come si sia evoluta una situazione di debito pubblico così alta. La seconda cosa che abbiamo chiesto è se nella storia ci fossero stati dei casi come l'attuale, in cui le banche centrali sono intervenuti a sostegno della congiuntura e del sistema finanziario, con quella che è l'azione di quantitative easing. Quindi abbiamo chiesto una riflessione su questi due temi che naturalmente viaggiano insieme e che per noi sono focali in termini di quello che può succedere nel prossimo futuro. Please, James, if you want to start.
Good afternoon, and thanks for inviting me today. Winton's core business is looking for patterns in data and doesn't rely on economic narratives. Yet nevertheless, we research financial history to help contextualize our models and data, and that's where I come in. So what I'll be presenting today is an example of the kinds of things we look at. So without further ado, let's proceed. Okay, so debt crises used to be the preserve of third world countries, but today an unprecedented number of developed economies are suffering from heavy debt burdens. It's true that yields are currently at record lows, but there comes a point where as many countries are now experiencing, where debt servicing requires an increasingly large chunk of government revenues, and more debt must be issued to service the existing debt. I'm not going to make predictions about how the current debt crisis is going to pan out. But I think it would be useful to have a look at the historical record, to see how governments have historically tackled debt, and to see if we can learn anything from this. But before I do so, I think that it would be useful to explore the nature of debt, public debt, and to see how we got to where we are today. What is debt? Well, essentially, debt is an obligation to pay somebody back. So treasury securities are debt, bank loans are debt, even our existence on this planet, according to many religions, is a debt. Fiat money, and by fiat I'm not referring to the famous car manufacturer, but rather to money without intrinsic worth, such as modern banknotes, is also a form of debt, as it represents circulating IOUs, which can be offset against other debts. And that's why modern banknotes state, "I promise to pay the bearer on demand." So what else can we say about debt? Well, debt is measured by money, so therefore the issue of money supply has always been important to debtors and creditors. Western societies have traditionally used gold and silver as a means of defining value, but and that's offered discipline, but the problem is that supply has often been arbitrary and hasn't expanded in tandem with trade, which has created severe money shortages on several occasions. Other societies have used other commodities. In Africa, until the early 19th century, many societies used cowrie shells, which served them very well until European imports started flooding the market, creating lots of an inflationary problem. And just to illustrate this, in 1800, 2 cowrie shells were sufficient to buy a woman, whereas by 1860 it would take 1,000. So in view of the problems with commodity-based money, societies increasingly turned to paper money, which initially was backed by gold, and then in 1971, with the collapse of the Bretton Woods system, became fiat, yet people still accept it on the basis that governments can raise taxation and will manage inflation. So how did we get to where we are today? Well, the debt problems didn't begin with the recent crisis. Rather, our story begins in medieval Italy, where city-states such as Florence found that they were able to raise much more money to fight their wars by issuing interest-bearing bonds rather than by relying on taxation. The next major development was the establishment of the Bank of England in 1694, and this was the first time where the private merchant class and the sovereign came together, with the private merchant supplying capital and management expertise, and the sovereign in return giving them a monopoly on note issuance. But I think the debt problems really took purchase in 1971 when the dollar was floated after the Bretton Woods system. For the first time, governments were able to print money to finance their deficits, and chronic trade imbalances became possible. And of course, the recent credit crisis has exacerbated that still further, as bank rescues have basically transferred private debt onto the public balance sheet. Okay, so let's move on. I think this is a nice image which represents the debt problems faced by many governments. Here, Sisyphus, who's representing Greece, is pushing up a heavy boulder which represents the Greek national debt, which is being painted to look like a football by Angela Merkel in the background, presumably to give the impression that it's a manageable load. But as we say in English, a cheetah can't change a leopard can't change its spots. Okay, so looking at the historical record, governments have often found it difficult to grow out of their debts and have thus typically resorted to one of 3 measures: austerity, default, or inflation. And we'll have a look at these in greater detail now. So austerity is essentially where governments cut their non-debt servicing expenditure to reduce their fiscal deficits. I'm not going to go into whether it works or not. I'll leave that to the Nobel Prize winners. But I'll provide a couple of examples of when it's been used. So after the First World War in the early 1920s, the British economy was in stagnation, and but the government still wanted to please its international creditors. So in 1926, Britain rejoined the international gold standard at the pre-war parity. But due to the intervening wartime inflation, this meant that the sterling was seriously overvalued at this parity. And necessitated austerity measures to drive down prices and wages. So in 1931, Chancellor Snowden he introduced some wide-ranging austerity measures that dramatically backfired. Within a few days, the stock market crashed. He was forced to abandon the austerity measures, and Britain left the gold standard, which was regarded as failure at the time. Yet, you know what? By the very next year, the British economy was booming, in stark contrast to many other countries who were still on the gold standard and instituting austerity. So I think that's probably counts against austerity in the historical record. And just to illustrate how unpopular austerity has been, in the 17th century, the Ottoman Sultan Osman II attempted to reduce his soldiers' pay. And the very next day, he was murdered by compression of the testicles, which is probably not a very nice punishment. After Chancellor Snowden's austerity measures, over 1,000 sailors in the Royal Navy, British Royal Navy, mutinied, which is a completely unprecedented event in British history. Default, that's our second measure. So in the Middle Ages, lending to the sovereign was very, very risky. You could lose much more than your capital. In medieval France, the kings had a tendency to wipe out their debts by executing all of their moneylenders, and debt restructuring, defaults were so bloody and so frequent that debt restructurings came to be known as bloodlettings. In England, King Edward I decided that he would not pay his loans to Jewish moneylenders and expelled the entire Jewish population in 1290, and they weren't allowed to return for another 300 years. But increasingly, as kings wanted to build international empires, they had to start worrying about their reputation. So they had a strong incentive not to default because otherwise it would make it more difficult for them to borrow in future. Countless examples of this, but I don't think I'll go into them because of time constraints. Another thing is that, despite the strong incentive against default, external defaults have been much more frequent than domestic defaults. I think governments have found it easier, especially when the creditors live a long way away. Since 1800, there have been some 250 external defaults, whereas compared to only 80 domestic defaults. Okay, and our third measure, inflation. Inflating away one's debts is also a very old practice. Since ancient times, rulers have been clipping, debasing, or otherwise diluting the value of their currency to erode the real value of their debts. The Roman denarius was lost 96% of its value over 2 centuries as successive emperors tried to make the silver content of the coins go further and pay for their wars using base coinage. Another example was in the early 18th century when John Law, the architect of the Mississippi bubble, which I'm sure many of you would have heard about, he was put in charge of managing the French national debt. And originally he didn't intend to inflate it away, but that's what happened nevertheless. Basically, he set up a company whose shares could be exchanged for government debt. So essentially creditors' sovereign debt holdings were turned into government equity. And then this government equity could be bought using unbacked paper money, which the sovereign had a very strong incentive to expand. But inflation doesn't always get rid of debts. In the Weimar Republic, for example, the hyperinflation destroyed domestic creditors, but left foreign creditors basically untouched because the reparations were denominated in gold. And and today, many governments would think twice before inflating away their debts. They would be, because pensioners in our aging societies have become a very important political constituency, and also because they would worry about the reaction from foreign creditors. But obviously these concerns are not shared by all governments. In Zimbabwe, for example, the currency, the Zim dollar, has been so devalued that it's literally no better than toilet paper. Quantitative easing. Essentially, quantitative easing is where the central bank buys up a wide range of financial assets from banks to stimulate lending and to boost demand for riskier assets such as equities. Again, I'm not going to go into the theoretical niceties of this, but a couple of good precedents, I think. In 1797, the French invasion of Wales triggered a liquidity crisis, and the British government successfully used quantitative easing as a means of containing that, although it set up a longer-term inflationary crisis. And similarly, in Britain, with the declaration of the First World War, the City of London took this very badly, and lending seized up, basically, as it did after the collapse of Lehman Brothers. So the British government issued lots and lots of unbacked paper money, and it bought up a huge number of assets, including over 1/3 of London's discount market. And again, as a result of this, no major institution failed, and recession was averted, although it's slightly unclear whether this was due to the quantitative easing or due to the stimulus offered by the First World War. And debt enforcement. So if a country reneges on its obligations, what can you as a creditor do about it? Well, in ancient times, in ancient Greece, creditors would seize public buildings, temples, the public colonnades, and so on. In 12th century Jerusalem, the Crusader king Baldwin secured his debt using his beard, but it's not known whether that was subsequently confiscated or not. I'll just rush through these because I think I'm short on time. In the 19th century, Britain and Western creditors liked using gunboat diplomacy, which is basically where they bomb the hell out of a country until it repaid. This was the case with Venezuela in 1903. And But sometimes, over time, it became slightly more refined, and Western creditors would form international administrations who would basically take over a country's finances and run the country as their own sort of possession. This was the case with China and the Ottoman Empire, where they were placed under house arrest. But any measure that involves trampling on a country's sovereignty is bound to be unpopular. There was, for example, in the Ottoman Empire, there were so many assassinations of foreign tax collectors that these assassinations became treated as a normal tax collection expense. And just very quickly, private debt enforcement, it might be worth having a look at that because and see if there's any inspiration for policymakers today. Until the 19th century in Britain, debtors could be arrested and sent to prison, except rather curiously on Sundays, which gave rise to a class of debtors known as Sunday gentlemen, who only went out on Sundays because they feared the rest of the week. Now, these debtor prisons, typically conjure up Dickensian images of appalling suffering, but this wasn't universally the case. In the 1720s, debtors' prisons were split into two sections. There was the aristocratic section, where inmates were wined, dined, and visited by prostitutes, and then the common section, where the inmates were visited by rats. But on second thoughts, I don't think that policymakers today would be able to make much use of that. So finally, just to wrap up, I think there are three observations I can make. The first is that nations have rarely grown out of their debt. There are serious drawbacks to the three primary methods of tackling debt, as we've seen: inflation, austerity, and default. And quantitative easing has inconclusive outcomes. There's plenty more I'd like to talk about, but I think it would be unfair to the next speaker. So thank you very much.
Grazie James. Visto il tempo che corre, invito subito Sandy sul palco. Sostanzialmente la sua riflessione riguarda il tema della diversificazione, il tema della correlazione. Ci siamo chiesti se abbia senso cercare di prevedere l'evoluzione della correlazione e quale sia l'approccio giusto alla diversificazione, se quindi sia un qualche cosa che vada affrontata in maniera statica nel tempo o se invece le regole che la governano in qualche maniera cambino e quindi, come dire, diversificare oggi sia diverso da quello che è stato diversificare ieri e possa essere ancora diverso un domani. Please, Sandy.
Okay, good afternoon. Gianluca asked me 6 questions about diversification. They're all very good questions, and they're all extremely hard to answer. So I'm going to give a go and take you through some of the things that I think we've learned in our business about correlations and diversification. Obviously, it's important whenever you build a portfolio, you need to understand about the diversification properties of the things you have in the portfolio. So the first thing is it worth trying to predict correlation? Should we try and have a view on whether correlation is going up or down? And the chart on the left-hand side up there shows correlation between equities and bonds. Now, of course, correlations can be as high as +1 and as low as -1. And what you see in the chart is that the correlations are very unstable. The correlation between equities and bonds goes up and down in a very chaotic fashion. And I think it's fair to say that if you look at the short-term correlation, it looks as it must be extremely hard to forecast in the future whether equities or bonds will be positively correlated or negatively correlated. You hope they'll be negatively correlated. When they're negatively correlated, you get nice diversification between equities and bonds. When they're positively correlated, that diversification or the protection that you get from bonds disappears. So first point I think is that short-term correlation is very unstable. What most people do about that is they use longer-term correlation. So the yellow line on the chart is 3-year correlation between equities and bonds, so using a 3-year window. And you can see that's more stable. And so most people, I think, conclude that it's better to use longer-term correlations. So then how do you control for risk? You pay a lot of attention to volatility. And volatility is more forecastable than correlations. So answer to the first difficult question, is it worth trying to predict correlation? Not really. It's very difficult, and most people don't try to. They come up with a stable estimate of some form and use that more stable estimate. The second question, which I think if you read the newspapers, you'll see quite often, is global economic integration, the fact that markets are much more closely linked today than they used to be, is global economic integration a problem for diversification? Does it just make correlations go up? And the view behind this would be, for example, if you looked at equities 40 years ago, if there was a problem in one country's equity market, it wouldn't really influence another country's market. And so there was really high diversification. So today you hear a lot, well, there was the crisis of 2008 and the following years, and diversification is dead. You can't find diversification anymore. So that's what people like to tell you. Is it true? We don't think it's true. And in the left-hand chart here, we've shown correlation, the average correlation between all the markets that we trade at AHL, and we trade about 300 markets, so a large range of markets. And what you see is the correlation went up a lot during the crisis. So diversification did die during the crisis. There weren't good places to hide, apart from cash, probably. But in the recent years, correlations have come down a lot, and diversification has become alive again. So I think it is fair to say that there are opportunities to diversify your portfolio again today, and we should not assume that the crisis was the normal state of affairs. Now, one extra detail, which I think is worth touching on, is on the right-hand side, the top chart is correlation between stocks. So I'm using equity markets here. So markets like the S&P 500, the Nikkei, the Euro stocks. And what you can see is in equity markets, correlations have come down a lot recently. There's really good opportunities in picking between one market and another, and it certainly feels like that today. You know, if you look at, for example, Asian equity markets compared to US markets or European markets, we're all behaving quite differently. And so the crisis ending, you clearly see in correlations going down between equity markets and increased diversification opportunities in equity markets. That's the good news. The bad news is in the bond markets. And so the bottom chart is showing correlations between global bond markets, and those correlations seem to be going up a bit at the moment. So are there good opportunities to diversify by buying German bonds or US bonds or Japanese bonds? No, those opportunities for diversification seem to be going down. And I'll come back to that theme a little bit later on. But diversification opportunities in bonds seem to be reducing. Diversification opportunities in equities seem to be improving. So the next question is diversification a free lunch? And there's a famous American academic, Harry Markowitz, who first said that diversification is the only free lunch in finance. It's perhaps worth saying, what is a free lunch? A free lunch is an American word. I'm British, so I have to learn about these things from the other side of the Atlantic. And it's actually a rather old word. It's an 18th century word. In pubs in New York, you could go and have a drink, and they would give you a free lunch with your drink. They would pour an enormous amount of salt into the free lunch, and as a result, you would drink a lot more than if you didn't have the free lunch. So the lunch wasn't free at all, actually. And that's the origins of the word free lunch. Here, what's the risk with diversification? Is it really something that's free, that's only an opportunity? The risk with diversification is that you think you are diversified. You go in and you build your portfolio carefully and you think you're diversified, and maybe you take more risk than you would have done otherwise, and then something happens and you learn that you weren't really diversified. And that's a very clear lesson from 2008, that many people thought they were diversified prior to 2008 and they weren't. So is diversification a free lunch? The answer is most of the time, but not all of the time, and we have to be a bit careful of that. So when do we have to be careful? The fourth question, when is correlation especially dangerous? Correlation, in our view, is especially dangerous when equity returns and bond returns become positively correlated. Now, what we really mean by that is that if equities go up and bond prices go up, sort of everybody's happy. You're making money on your equities and you're making money on your bonds. The problem is the other way round. The problem is when equities go down and the bonds that you own to diversify your portfolio also went down. It sort of sounds obvious. It doesn't happen that often. The last time it happened, and this will really take us on to the next theme, the last time it happened, in my view, was summer of last year. Now, this is looking at the US markets. Why did it happen in summer of last year? Because you had a little crisis in the US government bond market in May of last year when they started to talk about ending quantitative easing. Bond yields went up a lot, and equities, so bond prices fell, and equities fell at the same time. So the particularly dangerous time for diversification for most people is when equity returns and bond returns are positively correlated. And we should then look at, well, so when does this happen? When do equity returns and bond returns turn out to be positively correlated? And the key time that it happens is when the crisis comes from the bond market. So we have 2 points up here, the equity-bond correlation. So when bond markets are the primary driver, so when there's news in the bond market of some form, usually bad news, right? Whether it's a Eurozone crisis or the US starting to increase interest rates or something similar to those types of effects, then the bad news will force bonds down, and the bonds going down will push equities down. The other time when correlation, you need to think about drivers of correlation is when equity markets are the problem. So if there's a crisis in the equity markets for some form, usually in those periods, bonds diversify you. So you have good correlation then. So when should you be scared? When should you be scared about the correlation in your portfolio? You should be scared when you think a problem might come out of the bond market. And what's the next problem that we might have out of the bond markets? I think it's fairly obvious today. It's when the Federal Reserve in the US puts up interest rates. And if history is any guide, they tend to put up interest rates faster, and they tend to put interest rates up by more than people expect. And that'll be the form, in my view, of the next significant risk in correlations. And if you cast your mind back a bit, the last time you really had a crisis like that was February 1994. So just over 20 years ago, when the Fed put up interest rates a lot and very unexpectedly and caused a crisis in the bond market and a crisis in the equity market. So that's what I think we really need to be careful of, is that second bullet, when equity markets are the primary driver. When bond markets are the primary driver, so when they're driving equity markets. Okay, so my last point is really, so those are all things that we've noticed in markets. So what do we do about it? Because it's all very well to know that if equity returns and bond returns become positively correlated and cause you problems. So what do you do about it? I mean, one version is you sort of, sit there and hope nothing bad happens. You could have no diversification in your portfolio, which probably means own lots of bonds today. Neither of those really feel like solutions. So we have a few things that we use. The first is we don't tend to rely a lot on short-term return forecasts. It's very hard to forecast returns of assets over a week or a few weeks or something like that. So short-term return forecast is not one of the things that we do. The second thing, when we estimate correlation, we don't use short-term measures of correlation either. Why? Because it's really hard. It's very, very unstable. And I don't think it's, both theoretically, mathematically, it seems hard to predict correlation, but also practically, it's very hard to ask a person, what do you think in the next 3 months the correlation between equities and bonds will be? I think you're unlikely to find experts on that who you can be convinced will give you a good opinion. So we use long-term estimates of correlation. We don't use short-term estimates of correlation. So what do we do then to control our risk? Well, there are a few important things we do. The first thing is we're very sensitive to volatility going up. When volatility goes up, so when a bond market becomes volatile or an equity market becomes volatile, we think we can forecast volatility. In fact, we think we can forecast volatility better than we can forecast returns. So if we're good at forecasting volatility and we know that that's going to be the source of a problem, then you should be very sensitive to volatility. And the VIX would be one measure of volatility in US equities, but you should also use measures of volatility in bonds and other markets around the world. So that's, I think, a key thing. And then the other thing we do is we use a whole series of different controls for controlling your risk. Why do we have lots of them? Because we know that none of them will work all the time. So there's no single control that will work in all types of environment. It's all fine to look at the past and to try and find patterns in the past, but we know the future will not be the same at the past. So the way we control risk in our balanced portfolios is we use many different ways of controlling risk, knowing that none of them will be working all the time, but trusting that at least one of them will protect you in any crisis environment. And with that, I'm sure I've run out of time, but I should pass over back to Gianluca. Thank you.
Grazie. Sicuramente 2 interventi molto interessanti. Penso che, riferendomi al primo, sicuramente sia difficile dire che la storia tende a ripetersi uguale a se stessa, però quello che emerge è che ci sono degli schemi che sottostanti hanno delle regole economiche da cui non si scappa, verso cui si tende a tornare. Quindi mi viene da usare una frase che ha citato il secondo relatore, che non ci sono pasti gratis, e quindi, come dire, sicuramente ci sono dei temi, il tema che possiamo portare a casa è che sicuramente un debito pubblico così grande non si gestisce soltanto con il quantitative easing, ma sostanzialmente come dire, è un tema che rimane aperto. Per quanto riguarda il secondo intervento, mi sembra un messaggio sostanzialmente positivo, perché esce confermata l'importanza della diversificazione, ma mi sembra anche che emerga la complessità della materia, quindi è difficile, forse non conviene prevedere la correlazione, ma sicuramente si può fare molto sulla qualità della diversificazione. Quindi da questo punto di vista la regola è: primo, diversificare; secondo, cercare di farlo in maniera professionale. Detto questo, visto che siamo, come hanno detto i colleghi, short of time, ringrazio i 2 relatori, ringrazio soprattutto voi tutti per l'attenzione che ci avete dedicato e vi auguro buon Salone del Risparmio.